Imagine this. You're standing at the edge of a vast, shimmering ocean, the waves lapping at your feet. You've heard stories about the treasures that lie beneath the surface, but the ocean itself is vast and a little intimidating. Now, imagine this ocean is the world of investing, and you're about to take your first dive. Investing can feel overwhelming, as if you're stepping into an entirely new world. But here's the comforting part. You're not alone. Millions of people have stood exactly where you are now, on the shore, curious but cautious, and many have successfully navigated these waters. Let's start with a simple question. Why invest at all? It's like planting a tree. You don't expect to get shade or fruit immediately. But with time, care, and patience, your small sapling can grow into something substantial, offering you comfort and sustenance down the line. Investing is about allowing your money to work for you, growing over time to provide financial security, meet future goals, or simply build wealth. The first thing to understand is that investing is, in essence, putting your money to work in various vehicles, such as stocks, bonds, or real estate, with the aim of earning more than you initially invested. It's different from saving, which merely protects your money from inflation. Investing involves risk, yes, but more importantly, it offers opportunity. It's like tending to a garden. It requires a bit of work, knowledge, and the understanding that you can't control every element, like the weather. But with time, your efforts can yield bountiful results. Now let's talk about risk, a word that can often provoke fear. But risk, in the investing world, is simply the possibility of losing some or all of your initial investment. It's essential to understand that risk and reward are two sides of the same coin. In fact, the willingness to accept a certain degree of risk is what makes substantial gains possible. Think of it like riding a bicycle for the first time. There's the fear of falling, but also the thrill of eventual speed and freedom. The key to managing this fear is knowledge and preparation. Investments, like life decisions, range from conservative to aggressive. Conservative options like government bonds might feel like riding with training wheels. They're stable, but won't get you far very quickly. On the other hand, investing in stocks is akin to riding without any support. It's faster and riskier, but potentially more rewarding. Your comfort level with these investment rides will define your personal risk tolerance. Understanding this is crucial, as it shapes how you build your investment strategy, your roadmap, if you will. Diversification is another important concept. Think of it like a balanced diet. Just as you wouldn't eat only pizza for all your meals, it's wise not to invest all your money in a single stock or sector. By spreading your investments across various assets, you reduce the risk of a financial upset in any single investment. It's about not putting all your eggs in one basket and ensuring that if one area struggles, others can balance it out. Now let's discuss the emotional side of investing, the psychology of money, if you will. Emotions like fear and greed can heavily influence your investment decisions. It's natural to feel fear when markets dip and greed when they soar. But seasoned investors know that emotional decisions can be costly. There's a saying in investing, time in the market beats timing the market. This means it's generally wiser to stay invested, riding out the waves, rather than making impulsive decisions based on short-term market fluctuations. To build wealth over the long term, one needs patience and discipline. Remember, even the most successful investors have faced downturns. Warren Buffett, one of the most renowned investors, advises to be fearful when others are greedy and greedy when others are fearful. It's a reminder to think independently, to not follow the herd, and to have the courage to stick to your investment plan. Starting your investment journey can be as simple as opening a brokerage account. Today, with the digital age, you can do this from the comfort of your home. Many platforms offer educational resources and tools to help beginners understand the process. But before you start investing, it's crucial to have a clear financial plan. Identify your goals, whether it's buying a house, funding education, or retiring comfortably, and set a timeline for achieving these goals. This plan will guide your investment choices. As you reflect on this journey you're about to embark on, remember that the most valuable asset you have is time. Compound interest, which Albert Einstein famously referred to as the eighth wonder of the world, works exponentially in your favor. The earlier you start investing, the more time your money has to grow and multiply. So as you stand on the shoreline, ready to embark on this worthwhile adventure, remember that every great investor started just as you are now, curious, cautious, but with a desire to learn and grow. Investing is a journey, not a sprint. It's about making informed, thoughtful decisions and understanding that the ocean, with all its depth and possibilities, is there to provide as long as you sail wisely.